The US bond market can't completely fall apart. Why? Because you can print money and buy it. So that doesn't happen. The currency could weaken, but the rest of the world is even worse. So I'm not sure where this inflation, this mystical, magical, long-term structural, the 70s are coming back when you've got an aging population, you've got low productivity, and you've got an accelerated technological revolution, including AI, plus high debts. It's almost impossible to generate sustained inflation, which is why China can't generate it, Japan can't generate it, Europe can't generate it, and the US can't generate it either.
Since the US Federal Reserve announced its first rate cut in over 4 years during the September FOMC meeting, speculation has arisen that the 50 basis point reduction reflects panic from the central bank. Experts point out that the Fed has historically initiated a rate-cutting cycle with such a significant cut only 3 times. During the 2001 crisis, the Great Financial Crisis in 2007, and the COVID-19 pandemic in 2020. Each of these instances was followed by major economic downturns, leading many to believe that the Fed's decision to implement a large cut, despite claims of economic stability, suggests impending trouble for the U.S. economy. Billionaire investor Chamath Palihapitiya and venture capitalist David Sachs share this sentiment. They argue that the unexpected 50 basis point cut, instead of the anticipated 25, signals that the Fed may be preparing for serious challenges ahead. Both caution that Jerome Powell and other FOMC officials might already be in panic mode, despite efforts to project calm and avoid widespread economic chaos. Palihapitiya and Sachs predict that the Fed will likely announce further rate cuts before the year ends and may initiate a full-scale money printing cycle as panic escalates in the coming year. In contrast, Real Vision CEO Raoul holds a different view. He believes fears of a recession are unfounded, asserting that central banks, particularly the Federal Reserve, will not allow their economies to overheat. He emphasizes their ability to control inflation through extensive money printing, a strategy they've employed since the Great Financial Crisis. In a recent interview on the Julia L. Rowe Show, Powell expressed his bullish outlook on the U.S. economy and global financial markets. As we share highlights from the interview, we encourage you to like this video, subscribe to our channel, and turn on notifications for more content. Thank you for watching and enjoy the video.
Generally speaking, as I said, crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. But that's crypto. Crypto gives that kind of opportunity. The Nasdaq's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the Nasdaq, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what macro summer and macro fall. It's basically market utopia. There's a large group of people who want their justice. They want the system to fall apart, to say, I told you so. You're printing money. You're creating inflation. You're doing this. It's all unsustainable. And they don't want to see that what's actually happening, this 8% debasement, is basically all of us being charged 8% for a put option on the system, which is actually maybe not that bad, but they don't want to see it. And then a lot of people who aren't invested in technology can't stand the fact that it outperforms versus what was deemed to be the right way to invest, which was the value investor, the cyclical commodity, deep value, that thing. And that's not been working for 30 years, but yet they want it to come back. So they get more angry as markets go, and then they start drawing patterns about how it's going to crash. Well, markets, unlikely to crash unless it's further out the risk curve. But markets don't crash when the business cycle's picking up. They crash when the business cycle is slowing down. And let's say the ISM crosses 50. It never happens at this point of the cycle. So really, there's no real rational argument. And the Fed are cutting rates now. They're pushing liquidity into the system. The market's buoyant, and the ISM is going to start picking up. All the forward-looking indicators are. So it's really difficult to argue that there's a bubble and it's going to pop. And when we get to the bubble argument, something else they miss is they look at price earnings and they say, see, price earnings keep going up there. It's getting wildly expensive. But price and earnings, if you remember the story of your earnings and house prices are always going up more than your earnings. Well, what is price earnings? It's the share price, which is driven by debasement, and corporate earnings, which are driven by GDP growth. So over time, as we add liquidity into the system, the everything code suggests that price earnings will keep going higher because of this dynamic. But people don't understand it. So they look to a world of the past. Now, this has actually all been done before. This is not a brand new thing. After World War II, this is what they did. They used yield curve control as a way of stimulating the economy, and they essentially grew their way out of it by refinancing the debts. And we had exactly the same 4-year cycle back from about 1948 to about 1968. So we had 20 years of it back then.
Powell is confident about an impending wave of quantitative easing and money printing cycles, which he predicts will kick off in about 10 weeks. In a recent post on the social media platform X, he expressed his enthusiasm, saying, "I love the smell of more cowbell in the morning. The everything code is in full play, and we're only in the third inning. Remember, markets lagged global liquidity by 10 weeks, and the new China stimulus hasn't even shown up on the charts yet." Additionally, Powell is optimistic about the disruptive potential of technologies like artificial intelligence, robotics, and energy storage. He believes that this upcoming technological revolution will play a crucial role in addressing the world's massive debt problem. According to him, central banks simply need to continue printing money until these innovations can enhance productivity. This optimistic outlook fuels Powell's bullish stance on global markets, particularly cryptocurrencies. Here are more clips from the video.
The evolution was macro made all of the returns in very short periods of time in catastrophic markets. You know, a market like COVID was great for me because I know that playbook, right? You make a lot of returns very fast. But macro is becoming very difficult. There was a few macro opportunities that came since 2012, but not many. After the European debt crisis, what did we have? We had a collapse in the price of oil in 2016, 15. We had a decent rise in the dollar in the middle, and that was about it. But equities outperformed everything, and all the macro guys missed that trend. And this was my work that I did over COVID when I started to think about debasement of currency, and then started to think about the exponential age of technology and where this is going. And you reach the moment, it's like, oh my God, this is all one thing. You know, we have rising markets that's creating more capital, that's flowing into technology, that's driving technology. We've got the fastest pace of technological change in all human history, and the central bank has taken out the big risk to the downside. So suddenly the data tells you to become an optimist. It tells you that we're in secular trends, particularly in tech and crypto. So even though they're volatile, every low is higher than the last. And when you look back, they've outperformed everything. Even though you've had that volatility and you're like, why was I so stupid? You know, really, I could have just bought NASDAQ when I started my career and I'd have done much better. But the narrative is so alluring around the macro collapse. And the fear keeps so many people out of markets. And there's a whole bunch of people on X who've made a whole living out of the fear of collapse. And I know you've been caught up in that in the past. And that fear of collapse stops you investing. It stops you buying a house. And look what happened. Your future self did not thank you, your past self, because you missed it all. And I've done that. You know, I didn't own equities at all. And when I look back, you're like, what, stupid. But I didn't really understand. I didn't really understand what I know today. And now we've got all of these forces working together, this hyper acceleration of technology, global central bank liquidity that's forcing stuff up over time. And then the fact that they've taken away the largest side of the risk of markets, and the inflation bogeyman is just a bogeyman. He just exists in the dark places of your mind because it's very difficult to generate inflation in this world. They will tell you that, well, now the latest story is, well, obviously, every year there's a different story why energy is going to go to $200 a barrel, why it's all going to come to shit, and why inflation's coming back. Every year is a different narrative. Now it's like, well, it's the AI data centers. We're going to run out of electricity. It's going to be infinite demand for power. And oh my God, this is the most inflationary thing. They'll be wrong again, as they've been every single time.
Mm-hmm.
Hello guys, welcome back to another brand new video. Today I am back with another video in which Raoul has the founder of Real Vision and Micro Investment Investor CEO Raoul has discussed about Bitcoin and its potential and its market cap, how US government react on this. Let's watch the full video if you like. He discuss about the full video. If you watch full video, then you can easily understand what he going to say and what he discuss. I think all of guys are like this video, who are watching until the end and still watching. I hope this video will be useful for you. Thank you guys. I am now back with another of the videos. In videos I will start a quick match with random players.
Enemies ahead! Help!
Only few enemies are still alive. Thank you who are watching until the end.